The Brent crude prices have taken a hit today, falling below the $100 per barrel mark as the central bank eases euphoria fades. Also, markets expect the oil workers' strike to end, improving the crude supplies in Norway. The gold prices in the meanwhile have taken a knock as the strong dollar hurt the European appetite for the metal and as investors await the US jobs data to help gauge the health of the world's top economy. Traders believe that the US will post strong employment numbers, further denting the demand for gold, which has declined 0.25% in the Indian markets, and we have seen 1600 breach in the international markets as well. Let's get into strategies then, and Mr. Bose, let me come to you for the gold and silver prices first. The kind of profit taking that we have seen come in case of gold, are you looking at further declines then?
Yes, a little bit, because it's held on to its range recently very strongly. Support around 1560 and around 1530, and I'm expecting there will be another round of correction in gold towards 1530 levels, moving inversely to the dollar index. But as such, I think we've reached a time where festival demand and late season demand and ETF demand and central banks buying and physical fundamentals and everything else put together, US elections with all the problems that is not going away in Europe, Iran, Syria, everything points to very high gold prices. And that's why I think sometime later this summer you will start a move. So every dip from here is a buying situation. And I'm also of the opinion, Manisha, that gold's physical fundamentals are much better than what the paper markets are suggesting. We are seeing a lot of gold buying around the world and not enough supplies. That's why I think that although it's failed to hold on to 1620 or penetrate above 1640, gold going down from here could be a decoy move, and that's why one has to be very careful trading it. But I, as an investor, I'm very comfortable buying on dips from here.
Okay, no shots on gold, but Vijay, how about silver? Are you buying into that one as well?
I would be happy buying silver in physical, Manisha, in a very systematic and staggered manner. But buying futures at current levels for momentum players would be a difficult proposition, because 54,750 is the level which I'm looking out for. Unless silver crosses this threshold, and that too with higher volumes, open interest expansion, which tells you that concerted buying across the board is taking place from a whole lot of traders, I think it'll be difficult for silver to hold its head above this threshold. Every time it's coming to 54,500 or 54,750 odd levels, it's basically retracing downwards. So let's wait for a breakout and then go long on this commodity.
Mr. Bose, what's your sense for the crude prices? Because on a weekly basis, we've seen nearly 6 to 7% of gains coming in for the NYMEX and the Brent. But today has been a day of profit taking. What's your sense for the next week now?
Actually, Manisha, I think a lot of commodity funds were trapped by the decline in oil prices. A lot of them were long and wrong. Now, traditionally, as you know, in commodity markets, they say that when in May, sell and go away. And the summer months are supposed to be weak months for industrial commodities. That's why a correction is not surprising. The length of the correction and its pace surprised a lot of people. The bounce back in crude oil, as you've mentioned, Brent went up to $100 and WTI went up towards $87. Was because I think it's technical. I don't think it was driven by Euro Summit, because the Euro Summit is nothing. It's rhetoric. The fine print is always missing, and they've held, what, 18 or 20 summits since the last 2-3 years. That's why I don't think the summit buying bounce was worth its salt. I think it was a technical bounce. And if you've noticed that crude oils, 50% Fibonacci area is around $90 of its highs of $147 and lows of $35. That's why $90 is a pivotal place. A year ago it was struggling to go above that. Now if WTI doesn't settle above 90, it will come down. And I think this is an election year, as Vijay keeps on mentioning, and that this is a time when OPEC will, of course, support the American president, Saudi Arabia especially, and the incumbent will look towards lower oil prices. That's why I think there is a lot of momentum to push oil prices down. But there is a problem, Manisha, in that if corn supplies are affected by drought, and there is so much of bioethanol or biofuel mandate, then corn prices intersection or ethanol prices with crude oil will have an impact on WTI in the American scenario. That's a thing which needs watching, but the speculative long has gone, and I think the market will try once again to go and hit $78.
It's not just crude, it's natural gas as well, has gained more than 50% in this year itself. Vijay, what's your sense? Where is that one headed?
I'm bullish on natural gas because we've now finally crossed the 160 hurdle and trading comfortably above this threshold, Manisha. I would like to initiate fresh longs in natural gas, although in smaller lots. Wait for declines to buy at 163 levels, hold with a stop loss at 160 and expect to book profits at between 168 to 170 levels. Probably declines to lower levels of below 160 would encourage me to buy even more. But at this point in time, these are the levels that I would look at.
Vijay, what's your sense on the base metal prices? Because yesterday was a slightly better day. How would you want to treat them today on the last day of the week?
They're consolidating, Manisha, and they're showing no signs of excessive strength or excessive pessimism either. So they're range bound. They're kind of locked into a 3-3.5% range. Barring nickel, which is showing signs of some weakness that I would probably want to trade on the short side, I would wait for a marginal pullback to 927 levels. I would short it at 927 and then hold it with a stop loss at 930. And the target that I would look at for extinguishing these shorts would be at 921. Rather than go in for the regular lots, I think I would prefer to go into the mini future series because I'm not really convinced that the time that we have half a session today and probably a namesake session tomorrow would see so much of volatility on the prices. So exposure needs to be fairly calibrated.
One quick word from you as well, Mr. Bose, on the base metal sector. The only one that has, that seems to be closing this week in the green is aluminum.
That's because aluminium was very badly oversold till last week or 2 weeks ago, and it's bouncing from there. But by and large, the metal complex looks weak, and they've gained so much of traction over the years because of China. I'm not surprised that they're looking weak now. There could be more weakness into the summer because the fundamentals are not in favor of any of the metals, frankly.
All right, so cautious in energy and base metals, but buy coming in for gold from our experts.